The following is paid programming.
It's time to talk taxes.
New friends, new opportunities, new partners. E.G. Tax.
It's Ask the Tax Lady with Esther Gulius and E.G. Tax on News Radio 930 WBEN. To reach Esther now, call 803-0930. Toll free at 1-800-616-9236. And cell calls are free at star 930. And now, live from the WBEN studios, it's Esther Gulius.
Hello, all you taxpayers. This is Esther Gulius, the tax lady, and this is our hour to get you up to speed on all the money that's out there. I mean, there is just a ton of money out there, and we want to make sure you get it, no matter what your political persuasion is. It's out there. You may as well get what you can. And I got my buddies in studio with me. Hey, Tiffany Fabian.
Happy Saturday. Go Bills tomorrow.
Oh, I'm scared of that. And Christopher Fabian.
Hello, Esther.
Hello, Christopher. Okay, so we got a brand new thing that I haven't heard anybody talk about. But if you are a homeowner in the state of New York, and it's your primary residence, then there's a credit sitting out there between $250 and $350 if you're paying property taxes, and it starts off that, and it's for people with income up to $250,000. It starts off with the first layer at $75,000, and basically you take your taxes that you paid less your star, and you multiply that by 6%. If that figure then is multiplied by 14%, and if that answer is over 250 up to 350, that's what you get as a refund. Now, then the next level, this is like hieroglyphics. If your income exceeds 75,000, then you do the 6%. Then you do the 6% limitation, and then you divide your answer by 75, multiply it by 5, this is the God's truth, and subtract it from 14.
Oh, my gosh.
Okay. And then if that answer
that?
is over 250 to 350, you get that money back. Or if your income's over 100,000, then you take the 100,000, multiply it by 6%, divide it by by 100,000. Then you multiply it by, then you multiply it by, then you divide it, the 100,000 by your income. Then you multiply that by 6. And if that answer is higher than 250 to 350, you get a refund. Suffice it to say that if you are a taxpayer, property owner that lived in the state of New York in a personal residence more than 183 days, you want to get this credit.
You know, I was with a client the other day, and they had this big, huge problem. But part of the problem was I didn't have the 2 tax returns that I needed. So I said, I want to unravel your spaghetti, but I'm working with meatballs. And so, anyways, that sounds like a plate of spaghetti.
That's
there.
true. So anyway, it's the form IT-229. Then it's a lot of money. All right.
Yeah, well
the other
deserved.
thing before I get to the phone calls, 803-0930, 803-0930, star 930 on your cell phone. So think of this. Here you are, a parent at home with 3 children under the age of 18, and you didn't work in 20 or 21, but you did work in 19. So you can use your 19 wages to do the earned income credit. So if you made $15,000 in 2019, then you're going to get a refund if these kids are between the ages of 6 and 18 of $9,000 plus an earned income credit of about 8. So you get about $17,000.
So you mean if there's somebody at home and they didn't work at all in 2021 and they're thinking, well, they don't have to file.
Well, they might leave $17,000 on the table.
Right, especially with the child tax credit this year.
And it doesn't go against, it's not taxable income. And I'm telling you, that's what we're doing. I feel like ka-ching, ka-ching, money bags. You know, we're giving people lots of money.
That's good.
But we're helping you out. So I'm Esther Gulius, the tax lady, 803-0930, 803-0930, star 930 on a cell phone. And we're going to go to Pat. Hey, Pat, how can we help you?
Hi, Esther. I have 2 questions, if you don't mind.
Not at all.
Okay. For the county taxes for Amherst, for a senior discount, they said they use interest from annuities, but not from traditional IRA. Now, I looked at what I have, and I have a traditional IRA, but they talk about annuities in it. And I asked my financial guy, and he said they're really the same. He said, I don't know where they're coming from with this.
Not necessarily. An annuity, if there's an annuity in an IRA, that is like double kill. But most IRAs don't have annuities in them because an IRA in essence is an annuity. So, Chris, you have any insight onto this?
Yes. So, like you were saying, the IRA is a retirement investment. An annuity is just an investment, so they want your growth on your investment, not your retirement.
Right.
Okay, mine would be from a retirement because I had they made us.
Okay, but so it doesn't count against you.
So then
because it's not an annuity.
Okay, because it does say traditional IRA right on it. But I was reading, the contracts and everything. They talk about annuities, so I was getting really confused.
Well, why don't you go down to City Hall and sit with them?
Not City Hall. I got to go to Amherst.
Right.
Whatever.
Well, City Town,
and sit with them and say, please explain this to me.
Right.
All right, that's the best way. All right, that's number 1. What was number 2?
Okay. For donations, can it be used for income tax if you use a short form?
Yes.
RMD this year for 7.
Okay. Did you do the RMD where you did the charitable rollover?
No.
Okay. So if you have a required minimum distribution on an IRA, you could have done a charitable rollover and taken it from your IRA to the charity, and that would have made it completely tax-free. If you've given money over and above that to a charity, if you're filing a joint return, up to $600 is an adjustment, even if you file a short form.
Okay, so I'm talking about like church and Boys Town and religious donations, a little here and there.
Yeah, up to $600 if you're filing a joint return would be an adjustment to income, even if you don't itemize.
So that could be put on a short form then?
yes.
Yes, as an adjustment to income.
Right below your standard deduction, there's a line.
Right. And don't forget to do the 229.
What's a 229?
That's the refund of property taxes, brand new credit for the state of New York.
Maybe I should come in and have you do it.
Maybe. Sounds like a good idea.
Yeah, this is a brand new credit. I was just talking about it at the beginning of the show. And it can get you up to $250 to $350 in refund of your property taxes.
Oh. If the house is paid, it
makes no
doesn't
difference.
Even have to be paid for.
This is because the property taxes in the state of New York are so high.
I see. Okay. When do you start taking?
Oh, we're doing them right now, Pat. So Monday is the official opening of tax season.
Monday. Okay.
Okay.
Do I have to wait for anything special from the RMD? This is for.
You're going to get a 1099-R. Yes.
Oh, they're going to send me that.
Yes. And they have till the end of the month to get that to you.
Terrific.
Okay?
So much. Have a nice day.
Thank you, dear. Bye-bye. Okay, and we're going to go. Oh, okay. I know we got calls waiting. We're going to take a short break with Rob, Jean, Mike, Kevin, and your calls on the other side.
The bills make me wanna shout. Kick your heels up and shout. Throw your hands up and shout. Throw your head back and shout. Come on now. The bills are making it happen now.
Boy, I hope so. I hope that now let's see how if we win we ship them chicken wings. Is that how it works?
No, if we win they ship us barbecue.
Okay.
They ship everybody in Buffalo barbecue.
Wow, that'll be good. All right, let's go back to the phones, and Rob has waited so patiently. Hi, Rob.
Hello, sir. Listen, I had a question regarding my wife and her health care situation. Back in June, we saw an article in the news, the Money Smart section, about the availability, due to the American Rescue Plan that was passed back in March, that anybody that was getting unemployment, which she was through the PUA program because she was self-employed, was entitled to a health care premium break.
A credit, right? That was last year.
2021.
Right.
ended in December. So for about a half year, she was getting that credit, and it was substantially, I think she was only paying about $19 a month.
Mm-hmm.
And they said it when after she read the letter and went online and everything, that wasn't really based on your income. It was just sort of a blanket thing for people on unemployment.
Right, that were self-employed.
Right, but now we just got a letter, and it's sort of confusing us. We got a 1095A form.
Okay, but that means that you had health insurance. A 1095A form basically is saying that you had health insurance.
Through the marketplace.
Through the marketplace.
Okay.
And that you need to reconcile on an
your tax return,
8962.
Right. But are we going to be, for example, now she was paying the difference from what she was paying in the actual premium cost, the total premium.
Okay, so here's the thing. That form, because you got it through the marketplace, you got a subsidy, all right? You got help.
Yeah.
And that subsidy has to be reconciled now against all your other income. And yes, you might have to pay some taxes back on that. And so what form, Chris, does he use?
8962.
8962. And we might have to pay.
You might have to pay back some of the subsidy if your income's high enough. But it all depends on what your income ran. And if you want to call our office right now, we have I have several people that don't have appointments right now. You can call 632-7886, and they might be able to help you walk through that, Rob.
Oh, okay. Maybe I can have my wife do that. And one other question. It said it was retroactive to January of 2021. My wife didn't get on it until July.
Right. Well, the 1095A is just going to be showing what you actually got subsidy
For
for.
the 6 months.
You
For
should
that-
see on the 1095A, on the bottom half, it will list January through
Yeah,
December. And January through July for you should be blank.
Right.
Right.
Right?
That's right.
So,
For June.
yeah, so
through
you
June,
just have
sorry.
to do that reconciliation on the form to see if you have to pay anything back. And at that point in time, your income will be judged.
Okay, and it's based off our gross adjusted income, right?
With an adjustment, yes. Yes.
Yeah. So, I mean, as far as the health.
Yeah, you have to do your whole tax
Right.
return to reconcile
Right. To
that
make
form.
this work, you got to do the whole tax return.
The whole tax return.
Right.
And
Why don't you give them a call, Rob? Because right now I'm at a loss right here. So if you call my office, 632-7886, they'll help you walk through it.
okay.
All right. Thanks, Rob.
Those forms
All
are
right.
very confusing.
Very, very confusing. Okay. I got a text. What is the name of that form for the property tax rebate? It's an IT-229. IT-229. Well, somebody wanted to know that. And we're going to go to Jean. Hi, Jean. How can we help you?
Hey, Esther. I'd like to first thank you and Chris and Tiff for putting on a great show every week. I never miss it.
Oh, well, thank you very much.
That means a lot. Thank you.
About an S Corp. So I have an S Corp for several years. I always fill out the 1120S form.
Mm-hmm.
And I only have one employee, myself. So normally what I would do is I would log on and submit to the Social Security my W-3 and my W-2, the W-2 for myself.
Mm-hmm.
Now, this past year, I had no income at all, and I did not issue any salary at all. So do I still need to submit a W-3 with...
Do you have no net profit, Jean?
No, I had no activity at all.
You
Right.
don't have to do a W-3. You have to do your quarterly payroll reporting with zeros.
Right.
I did do that,
Yep.
yes.
Then you're good.
The F941.
941.
Yep.
Right.
Right, but I don't need to do a W-3 or W-2 at all.
Not if there was no wages. No, because you've been reporting it quarterly.
Yes.
So they already know there was no activity. Are you closing the corporation?
I don't know yet. I'm kind of in a hiatus.
Now you have to make sure that you do your corporate return, though. You want to make sure you do your corporate return.
1120S I'll still do by March 5th.
That's right.
Okay, thank you.
You're welcome, Jean. Bye-bye. I'm Esther Gullius, the tax lady. 8030930, 8030930, star 930 on a cell phone. You can text us at 716-8030930. And we're going to go back to Mike. Hey, Mike.
Hello. I have two questions. One you may have answered previously.
Okay.
You said you can still use charitable contributions as a deduction without itemizing?
That's right. If you are single, up to the first $300 you gave, and if you're filing a joint return, up to the first $600 you gave as an adjustment to income without itemizing.
You have to have proof, something.
Well, I mean, if they audit you, you got to prove it. Yes.
Right. Okay. The other question, what you just stated, that new deduction, that sounds like a trick question on the new.
You ought to read the law. You talk about trick question. I read it and I read it and I read it, then I read it, then I read it. But it's when you put a pencil to it that it starts to make sense. Very simply, it looks like 6% is where they think that would be fair, that you would pay in taxes. Then your excess over the 6%, they limit to 14% of that excess, and that has to be at least $250 to $350 in order to get anything. So if you had $50,000 in wages, $50,000 in adjusted gross income, 6% is $3,000. So if your property taxes are 5, then you're over by 2, and 14% of 2 is $280, and so you'd get a $280 credit refund.
It starts with as long as you paid more than 6% of your property taxes.
That would
over
be
your adjusted gross
that's
income.
your starting point.
That's your starting point.
On the internet that you can look up?
Yeah, you can go now. Where's it? You told me to look, Chris, the other day
For what? For
to
what?
find out your property taxes.
Oh, you can just Google your town. Where do you live?
In Wheatfield.
In Wheatfield? Yeah. I think Niagara County actually has it all on one. Just Google Niagara County property taxes, and then it will say what district are you in, and then you type in your address, and it will all come up.
And it shows exactly how much you paid in taxes.
Boy, I never heard anything so complicated.
Welcome to the wonderful world of taxes.
Or government.
Right? Okay, Mike, thanks for calling. Okay, and we're going to go to Kevin. Hi, Kev.
Yeah.
Hey, how you doing, folks? Good day to you. You may have answered this question before, but forgive me, when I get to my age and stage, these things happen. I discovered from a previous employer IRA just sitting there, and it used to be a 401k, but again, that was with a previous employer. Will the federal or state government, penalize me or tax me if I could? Could I take that IRA and turn it over into my current 401k I have with my current employers? Can I do that?
If your employer would allow you to roll over your existing IRA or pension into their plan, that would be fine if that's what they will allow. Most employers won't.
Right. It has to go into a qualified plan.
Right.
Another qualified plan.
Right.
That one doesn't let you.
So you can roll it. Kevin, you can take it where it's at and roll it into an IRA anywhere, and it's going to be tax-free as long as you don't take the money.
Within 60 days if the cash touches your hand.
Right, but again, but that's just if they allow it. So could I can't take it and convert it into an investment like a CD or something like that?
Well, it'd have to be a qualified plan. So it has to be a qualified, if you're taking it from a 401k into an IRA, it has to be a qualified individual retirement account, and you can do a direct rollover from where it is into that IRA. If you get a check, you have 60 days that you can have the money in your care until you put it into an IRA, but it has to go into a qualified plan.
Right, and then you can invest it however you want inside the IRA.
Absolutely.
Yeah.
Now, if it's not a lot of money and you're over the age of 59 and a half, you just might want to cash it in, Kevin,
Right. Okay. Great. Okay. Well, thanks again.
Hey, thanks a lot, Kevin. Thanks for calling.
So it's
He's
all
that
depend-
Jamaica man.
Yeah, it all depends on what that employer will let you, if they'll let you roll it over there,
Right.
Kevin.
I'm Esther Gillius, the tax lady from EG Tax, 8030930, 8030930, star 930 on a cell phone. You can text us at 716
There's one other
8030930.
text before that
Yes.
text. There's a
Okay.
text before that
Okay,
text.
yes.
Well, but I'll read this one. But you need the little mouse over there.
I need the mouse. Here's the mouse.
Here's the mouse. The IRS
Here,
did.
where's the mouse?
Okay, so let's read this one. IRS did not receive my extension. Now I have penalties. Should I pay penalties and argue the extension issue? Well, you probably should pay the penalties.
If you mailed it in, that's a good reason why they probably haven't processed your extension yet.
But the thing is, if there's penalties, there had to be money due, right?
Yep.
So when you file an extension, you have to pay the taxes due, or else the extension's no good. So when you file an extension, they want the money with the extension. So if you didn't pay the money, they're going to penalize you.
Yeah.
So you should pay the penalty.
This one says that I was looking for the mouse for. It said, "Hi, Esther. Is a refund in addition to the New York State property tax refund that the state had already sent out in the past?" The answer is yes.
Yes.
And then Robbie Raw said, "Just tell people to come and see you, Robbie Raw." Yay.
Do you know
It's
Robbie? So
Florida.
Robbie's
You're gonna
listening,
tell me
and you
Florida.
know I have a house in Florida, Robbie. So when I'm in Florida, I hear you advertising for the Good Feet store, and the first time I heard it, I almost cracked up my car because I
Wait,
thought,
I'm not
"Wait a
in
minute, am
Buffalo."
I in Buffalo or am I in Florida?" Anyway, Robbie Raw's a phenomenal lady. What else we got?
Thank you, Esther, Mark, in Niagara Falls. I'm grateful you just do your thing when we come in, Chris, Robbie.
Oh, that's great. All right, and we're all good here?
And then one other. Did I hear you correctly? If your only income is Social Security disability, you should have gotten 3 stimulus
That's
checks.
exactly right. And by the way, something else I want to talk about later on. If you didn't get all 3 stimuluses, you're still entitled to it, and we can help you to do that as well. And if you're a dependent that you're claiming this year didn't get it, you can get it on this year's return under reconciliation. And if you had new babies, you can get the stimulus, $1,400 stimulus as well. So a lot of money out there. We're going to take a short break. I'm
And we'll
Esther
talk to
Gilius, the
Bob
tax
and
lady.
Marty on the other
We'll
side.
be with Bob and Marty on the other side, and your calls.
Shout it right now, baby. Say you will. Come on, come on. Say you will. Come on and shout.
That's an old one, Frank, isn't it? Isn't that an old song?
Oldie but a goodie.
Oldie but a goodie, yeah.
It's the best one.
I know. That I love the Bills, so I hope they do good tomorrow. Okay, but you know, when they do so good, it seems like then they don't do so good. I don't know, you know? And then
No,
when
I
I
don't
when I
think
saw
that's
that other quarterback for the Washington football
Kansas City.
Kansas City.
wasn't it? No, wasn't he? Is from Washington. The quarterback had his shirt off.
Oh, yeah.
Fitzpatrick.
Yeah, I mean
He was in the
that
stands.
he was
You got
in
Fitz-
our stands, and he was so excited he
used
took
to
his
play
shirt
for-
off.
He used
Yes,
to
he used
for
to
us.
play for us.
Oh, well, that's remarkable. Anyway, let's go back to the phones. We're going to talk to Bob. Hey, Bob, how can we help you? Hey, Bob. Oh, Bob.
What about Bob?
Are you there, Bob? Bob, are you there?
Put him on hold. We can go back. to
All
him.
right, we will, and we'll go to Marty. Hi, Marty. Can I help you?
Yeah, I got a question about my life insurance. I'm 85 now, and endowment date is next month. But the policy is $5,000, and it says taxable gain is $5,276. Shouldn't it just be the dividends that are being taxed?
Well, it's the appreciation over what you paid, whatever the cash surrender value you would get. What's taxable would be over what you paid for it. So you'd really have to go to your life insurance company and find out how they made that determination, because it would be the gain that would be taxable if you cash it in.
Yeah, but the only gain would be the dividend, it seems like.
Well, but over how many years,
And it's
right?
1966, you know.
I mean, that's a long time, Marty.
Yeah.
The only one can answer that is the insurance company.
Oh, okay.
All right.
I got a number 10 for Mr. Kitchen there. What is it? What is that?
Well, no, Mr. Kitchen isn't going to help you. You got to call the insurance company.
I just want to say I went through bankruptcy with him, and I really appreciate it. He was
Oh, yeah,
that's
he's a
nice.
good guy. He's a good guy. Okay, Marty, thanks for calling. Let's go Bills. And we got Marlene. Hi, Marlene. How can we help you?
Hi. I have a question about that 229 form.
Yeah.
You don't have any income? Does it work for you too?
As long as you
yeah.
pay
Yeah.
property
Absolutely.
taxes.
Right.
If you paid, like if you're on Social Security and
Yeah, that would
Right.
work.
Right.
it works.
Yeah, it does work.
Okay, very good. Thank you.
All right. Thanks, Marlene. Okay, let's go back to Bob, see if we got Bob. Hey, Bob, are you there?
Yeah.
Now, where were you? Just loafing around. How are you? How can we help you?
Yourself? Great.
Good. Good.
Thanks for taking my call. I'm getting an inheritance from my deceased sister,
Okay.
brother and I, okay, which came out of the blue. We weren't expecting this. I wasn't expecting this at all. How is this gonna? I paid taxes last year, but according to the tax lady I have, she said I didn't have to file this year.
Okay. So first of all, it all depends on. Have you gotten a distribution in 2021 from your sister?
What are you inheriting?
Money.
All right. Just cash.
Well.
Was it a pension? Did you inherit a pension? Did you inherit stocks and bonds? Did you inherit a house? Or did you just inherit money?
Schwab.
All right, you have a Schwab account, right?
Yeah.
All right, did you sell anything last year?
No, nothing.
All right, so when you got the Schwab account from your sister, it was put in your name. It's not an IRA, it's just stocks and bonds, right?
I according to what it's from some fiduciary place outside. She lived in Rochester, okay, and I guess, like I said, this came out of the blue.
Okay, but the question is, did you sell anything out of that account last year?
No, I haven't even received anything.
Okay. All right, so you haven't. So number one, Bob, if you didn't receive anything, in the year you receive it, that's the year you'd be concerned. Number two, if it's just stocks and bonds and you inherited it, you get a stepped-up basis, and the difference between what it was worth when your sister passed away and what you sell it for, that's going to be the gain or loss. And if it was worth $2,000 and you sell it for $2,500, then you got a $500 gain. Okay, so that would be in the year that you sell it. If you didn't get anything other than that, no IRAs, you didn't inherit a house and you're selling the house, then that would be all that you have to
But
to
I was
deal
wondering
with.
if he owns a house. Do you own a house, Bob?
Yeah, I do.
All right, so you want to do the 229. You want to do the IT 229 where you could potentially get a refund of $250 to $350 for your property taxes that you paid.
It's a
Good
new
call,
credit.
Tiff.
Thank you.
New credit.
But see, this is going to be coming in cash.
Okay, the 229 has to do with your property taxes. That's a refund the state of New York wants to give you, and your sale of stuff that you get from your sister, that'll be in 2022, and you don't have to worry about it till next year, when you file.
Oh, well, like I said, it's going to be cash, so I'll be getting either a monthly.
Okay, when you get the money, Bob, give us a jingle, and we'll take a look at what you got. Okay?
Okay, fine. Yeah. True.
All right. Thank you.
Thank you.
Bye-bye.
It is very
Yeah,
confusing.
there's so many different.
Which I wanted to talk about anyway. I wanted to talk about decedents returns because people get so confused when they're handling a sister, a brother, an aunt, an uncle, husband, or wife. They don't understand that. We'll talk about that too. I'm Esther Gilius, the tax lady, 8030930.
I just
8030930, star 930 on a cell phone. You can text us at 716-8030930.
I just
Yes,
want to
ma'am.
say that all of our 33 offices are open, and you can call 632-7886 to schedule. And tomorrow, Sunday, even though the Bills are playing, the McKinley Mall's open.
Yes, correct. And we do have in our newer offices, we have limited hours and availability. So you might find that we're open Monday, Wednesday, and Friday, but you can make your appointment. And because we picked up those new offices, we have limited staff. So, and we want to make sure we put the best people in the offices. Okay, and again, 8030930, 8030930, star 930 on a cell phone. So you can text it to 716-8030930. I wanted to make sure that I mentioned about the daycare credit. Holy moly. That's another biggie.
It is. It could be up to 50% of what you paid in, and that's a huge credit. And
Up to $8,000.
Per child.
Yep, it's
huge.
huge.
Two or more children.
Well, 8,000 for one, 16,000 for two or more.
But the credit is $8,000.
Right.
Yeah.
Right.
I was
Yeah.
talking about the credit.
Yeah.
We're mixing up metaphors here. So anyway, so if you're paying for daycare, you can get a refundable credit of up to $8,000. So let's say you don't pay any taxes. they're going to give you the child tax credit, if you didn't get the stimulus credit, and the daycare credit. So you could be walking around, like my commercial says, $27,000 and pay no taxes.
That's good.
Right?
That's really good.
Education credits. I used to get excited about the education credit. Do you remember when we used to get excited?
Yes.
$1,000 refundable. Ha! That's like a drop in the bucket.
I know, but that's the AOTC. Up to $2,500, $1,500 is non-refundable, and the $1,000 is refundable. And then New York State
of New York
gives
too.
you up to $400 for college.
Right. Okay. I wanted to also talk about, very briefly, decedents. When somebody passes away and they leave you in charge of their estate, the first thing is there are basically two potential tax returns in that situation. Right, Chris?
Right. There's the 1041. Well, there's the 1040 that you have to do, the final return. And then there's the 1041, which is, hey, government, I died, but I'm still making money.
Right. So when you're alive, all the money that you made while you were living is on the 1040 form. The day you pass away, the money that your money makes after your death goes on a 1041, which is a fiduciary return. Now, you may not have to do the return for the decedent, and you may not have to do the 1041 if there was no income. But here's an interesting twist this year. Let's say that, let's go back to somebody that's living. Let's say I'm a senior and I made $5,000 working part-time as a groundskeeper at a golf resort last summer. Do I have to file a return?
Well, by jinkies,
the earned income credit.
You don't have to file. You may want to file if you want an extra $769
plus the possibility of this $350 with the state of New York, right?
Right.
And did you also count the 20% with the state of New York?
Because I don't know if the New York State went along with that one.
Oh, that's true. So, but you're looking at possibly $1,300 on money you made $5,000 for.
Yeah.
So you don't have to file, but you might want to file. You'd want to file because you got money coming back.
And as I was saying in our podcast that we did earlier this week, I did a 1041 this week for a sister, and her brother had passed away, and he had a rental and he had a small business because he was a therapist, and he got money in from insurance companies after he already had passed away. So on his 1041, he had a trust with a Schedule E and a Schedule C. So it's a real thing that happens all the time. And I think Chris does a really good job of explaining it. Right, Chris?
I try.
All right. I'm Esther Gilius, the tax lady. 8030930, 8030930, star 930 on our cell phone. Text it to 716-8030930. We're going to take a short break. We'll be back with your calls. I know, Mike, we got you holding. We'll be right with you.
Just watch it happen now.
Let's go, Buffalo. I remember that because I'm an oldie but a goodie myself. I love this one text that we got. It says, Esther, go Bills, love y'all's show. Travis from Oklahoma.
That's
y'all.
Crazy. Dang.
Yeah.
He's they're friends with Larry from Georgia.
Yeah, right. Okay, what do we got here?
I rolled over an annuity to a traditional IRA, as well as moved over a traditional IRA from a company to another company and took no withdrawals. I am 69 years old. Am I required to file any forms on my taxes?
Oh, yeah. You know, when they send you these 1099-Rs, they go to the IRS. And the IRS doesn't know what happened to you until you put it on a form to keep them abreast. So, yes, you want to make sure you file your
box 7 would be G for rollover,
right?
Or you'd want to indicate that it was rolled over.
And the other thing is you might get the 229 on the state of New York,
I thought
right?
about that. Yeah.
Right. Okay. Let's go back to the phones. My buddy here has been waiting a long time. Mike, how can I help you, sir?
Not that bad. It's been a short time.
Oh, you're a sweetie pie. What can we do for
I
you?
like his voice. I know Mike's voice.
We were talking about the state giving back some of the money on our property taxes. Is that the same thing that they used to give back, or is this something new?
Something new, brand new. Brand new. So this is over and above STAR. and over and above all of your other discounts. So this is something you only get when you file a New York return, and it's an IT 229.
Okay, this is for tax year 2021?
Yes, sir.
All right, and there was also, I believe, $300 you mentioned if you don't itemize any.
Okay, so charity, if you're single, up to $300 that you gave to charity, qualified 501c3 if you're single, $600 if you're filing a joint return as an adjustment even if you don't itemize.
Okay, now I do have some receipts for some stuff and certain things I don't.
Well, you can only take what you can prove.
Okay, all right.
Okay?
All right.
Hey, Mike, thanks for listening. And go Bills.
Yeah.
All right, bye-bye. Okay, and we're going to go to Wayne. Hi, Wayne.
Hi.
What can we do for you?
Oh, I was wondering if I needed to file income taxes at all. All I drew for 2021 was Social Security and a small annuity,
Okay, how much was the annuity?
$300 a month.
$3,600. Did they take anything out of it?
No.
Well, wait.
Okay.
Let me ask you, were you working in 2019?
Yeah.
How much did you make in 2019?
2019, maybe $35,000.
Okay.
All right. No, you didn't have children living with you, did you?
No.
Okay. What Chris is alluding to is you could have looked at the earned income credit from 2019 because you didn't have wages now to file, but you'd qualify for the earned income credit if you had wages of more like $12,000, but $35,000 is too much to get the EIC. Had you had children, though, you would have gotten an earned income credit. So do you own your own home, Wayne?
Yes.
So you want to look at that IT 229 so that you possibly can get $250 to $350 refund from your property taxes.
Even if I didn't pay any taxes, huh?
Yep.
Wait.
Yep.
We're talking
you paid-
property taxes. You paid property taxes, didn't you?
I pay property taxes, but no income tax.
That's right. So you'd get we're looking at a credit for a refund of your property taxes on the IT 229, brand new form.
Oh, yeah, even though I got the enhanced star and all that?
Yes, sir.
Oh, but I don't need to file income taxes?
Not if from what you're telling me, it doesn't sound like you have to.
But you might want to file a New York return.
But the New York return would be the 229.
229.
Okay?
Go Bills.
Go Bills.
Go Bills.
Good question.
Yep. Okay. I'm Esther Gilius, the tax lady, 8030930, 8030930. Star 930 on a cell phone. Text us at 716-8030930. We wanted to talk about other things that are taxable. On your federal return, it says state and local income tax refunds. Is that always taxable?
No.
Especially in New York State because it has so many refundable credits.
Yep.
So if you didn't itemize, or if you did itemize and you got some credits, you have to reduce the amount of refund by those refundable credits that may not be taxable at all. Alimony. Is alimony taxable?
Yeah, but not after 2019. It's not taxable.
Right, but it is taxable in New York State.
It is.
And deductible for the payer on New York State, but it's not taxable and not deductible if it's a post-2019 divorce.
Thank you.
Right?
Yep. That's what I was going to say.
Thank you, Chris. Thank you, Chris. Unemployment. Unemployment is taxable, and I had several people this week say, oh, my gosh, how am I supposed to get those forms? If you are somebody that went online and you forgot how to get online, you can call. There's a number, toll-free number to call, and the state of New York will line you up to get it mailed to your house. So they don't give you the forms. You got to ask for them. So you make sure you get your unemployment because it's fully taxable. Debt cancellation. What does that mean?
That's say you have an American Express credit card and you owe $10,000 on it and you settle for $5,000. That $5,000 that you settled out of becomes taxable, and so they issue you a document, a 1099, saying that that's taxable at the end of the year. However, if you're insolvent, you can possibly do a Form 982 and exclude that taxability on your return.
So debt cancellation. So when they're saying, and we can save you lots of money and we're negotiating down with your creditors, remember, two things are going to happen. You're going to get a form that says it's taxable, and number two, it's going to hurt your credit. All right?
Correct.
Now, if you have more liabilities at the time of the debt forgiveness than you have assets, then you're insolvent, and the insolvency up to the debt cancellation, when you do Form 982, can eliminate it. So that's something else we want to talk about, right?
Yep.
Okay, and we're going to go to Sue
in Orchard Park.
Hey, Sue, how can we help you?
Hi, I have a question. I've asked a few people, and I get different answers all over the place.
Okay.
This is my daughter. In 2019, their gross income was under $150,000, and in 2020, it went above $150,000.
Okay.
With the stimulus payment, if you make over $150,000, you didn't get the stimulus money.
Right? You mean the $1,400?
Right.
Okay.
So they said to use your 2019 or your 2020 tax return. So you were allowed to submit the 2019 one, but the person who did her taxes already submitted the one that was over $150,000. So she lost out on like $9,000. Can you change that at all, or is once
No.
it's done, it's done?
Did her income drop at all for 2021? Or did it continue to go up?
21. Oh, I really don't know.
Yeah, because if her income dropped under 160, you still have to reconcile the third stimulus. So she still might be able to get
Should have
some...
an opportunity to take a whack at it. Yeah.
Yep.
So why don't you ask your daughter and give us a jingle, and we'll look at it and see if we can help you.
Okay, so what you're saying is if she made under 160 for this past year, that she might be able to get some of that money back?
Yep.
Okay. I will...
Because it's a phase out from 150 to 160.
Oh, okay.
Okay.
So that depends if her income kept going up,
And
like Chris asked.
and if she didn't have an IRA, maybe
She can put money
in
into
an
an
IRA
IRA.
and reduce it even further. So that you never know. We can sometimes pull a rabbit out of a hat.
Okay. Thank you very much.
Thanks, Sue. Okay, and then what do we got here?
We've got, hey, Esther, my husband and I split up this year, and he purchased a house. We did a cash out refi on the house we were living in, and now the house is in my name only. I'm just wondering how we should file taxes and if we should file, together, or I have no idea. Please help.
Okay, so split up really doesn't say if you got a divorce. If just because you're not living together, if you're still legally married, then your only option is married filing a joint return or married filing separately, unless you had children living in your home and your spouse left the house before July, and in that case, you're considered single for tax purposes. I know that's how sounds weird, but that's how it works. So what we need to know is, are you guys married? Because if you are married, you might want to consider filing a joint return. So what I suggest, you can go to egtax.com, ask the tax lady, and write in that information, and I'll text you right back.
Usually, if they were still married, what I would do if they were my clients is I would run the numbers and see if it was better financially married
way?
or married filing separate.
That's true.
And so you really want to run the numbers and see where it's better. It's usually never better where one takes half the house and the other takes the other half because the standard deduction is so large.
You want to lean on, you want to put those expenses on one taxpayer so that you can get over that standard deduction, especially if you're single, because it's easier to
and if
itemize.
you're not married and you're both trying to itemize, you're only limited to $5,000 on the state taxes paid section.
That's exactly right. All right, let's quickly go to Carolyn. Hi, Carolyn.
Oh, hello, Esther. Thank you for all you do.
Thank you.
First of all, for the Enhanced Star, Esther, what lines do you use to determine, and it's after you deduct your MRDs?
Are you talking about the 229?
No, that's...
The True Star return form, exemption form?
Yeah. No, I understand that new one, but I'm just saying from the STAR program to Enhanced STAR, what line determines
Well, it isn't a given line number. It's a modified adjusted gross income because you have to add in your full Social Security, where your tax return doesn't do that. So you really have to fill out the forms that the town sends you because it says what is all your income, not counting your IRAs.
Okay, but if you had already signed the approval for them to delve into your financial
situation.
Yeah, records for all the years, and I was denied one year because I had a whole bunch of bonds that matured, and I cashed them in, so it put us out of whack there.
Yeah.
But after that, do they do it still on their own? Like you signed the paper for them to do that?
You would have to call your town or your city hall and ask them if
say.
they need your copy of your tax return.
Okay, Carolyn, we're running short of time. I'm so sorry.
Thank you very much.
All right,
But you
thank
can call us at the office.
Yeah, call us at the office at 632-7886. Maria and Dana and Karen are there right now, and they could help you too. But yes, sir.
Real fast, somebody texted about filing separate for the child tax credit.
Yep.
You can do that, but the only thing is you got half, she got half. Your income's too high, you're going to have to pay back your half. So what you're thinking you're saving, you may end up losing.
That's true. I'm Esther Golias, the tax lady. We hope when you think about taxes, you'll think about EG Tax. Until next week, I'm Esther Golias, the tax lady, Christopher Fabian, Tiffany Fabian, and God bless the bills. Thank you. Bye-bye.